see about that. I'm gonna give Shakima a few minutes to see if she's going to be able to attend at least the first part of the live. If not, I will be moving on in a few minutes here. Y'all have gone. So in this one, we will be covering breaker blocks. And this is going to change the game for a lot of you. This is going to change the game for a lot of you. Give me one moment. Okay, so this is going to change the game for a lot of you. And it's pretty insane. Here, can you close that door? Here, can you close the door? Thank you. So this is going to change the game for a lot of you. This is how the algorithm works. So how many of you are at least familiar with support resistance and how that works, right? Everybody has heard of, or maybe not even used the concept before, but are familiar with support and resistance. Okay, perfect. So I did take a couple makeshift trades on a demo account just for the purpose of this example. Did full analysis and everything. So the idea is that on Australian dollars Swiss franc, the daily was going to continue to the downside. You had price come all the way back up right here on this leg, basically take out these buy stops all the way up to here and this high and mitigate this order block right here and for this fair value gap, which is right here. I marked up the skinny kind of red range right here. So basically it came up and filled the fair value gap and tapped into this order block all at the same time within a few days. Jump in the chat box if you can see that. Perfect. So I saw the daily in premium territory. Man, that's dope. So yeah, I saw the daily in premium territory, and then I saw the fact that it did come up and do that here, mitigated that area here, and also started to come down and chase this low right here. So I saw that it was flirting, coming down and starting to flirt with this low right here, and basically my idea was that this was going to have continued downside with the. I think so loud. Jesus, give me 10 seconds. All right. So my idea was that this was going to have continued downside risk and or downside objective, given that they were chasing the sell stops. Look at my mouse. I literally just had that thing. There it is. Okay. The idea was that this was going to have continued downside pull to the downside, and I did mark up these daily sell stops right here. Drop one in the chat box if you can see that. That's dope. So, this is obviously a low here. You can target a more short-term low, but they already stabbed into this low, and I marked that up as well, just to kind of show you that was marked up. So I dropped down to the 4H, which is my entry time frame for the swing trade that I did enter today. I also entered this on my actual accounts, but I had to also enter it on here just for the purpose of this example. I simulated a $10,000 account going for 0.1%. So going down to the 4H, you can see that, and this is where we're going to kind of get into the meat and potatoes. Getting down to the 4H, you can see that you had displacement higher here, and that was when this this candle traded above this high. Jump on the chat box if you can see that. Okay, so it came down there, and that was my displacement higher, right? We're looking at this impulse move from here to here, right? And this low down here, I would say, and basically this impulse move, this area right here. You're looking for displacement higher and then lower, right? So that's what happened. Displacement higher came, buy side liquidity take, and then the displacement lower came, and that was the sell side liquidity take. I do like to mark up the liquidity take and the displacement. Technically speaking, the displacement did happen down here. That's where that ended. Drop one in the chat box if you can see that. So there was this fair value gap right here that ended up occurring. And I didn't unmark that up for the purpose of just kind of highlighting the point of this video. You do see this fair value gap from this candle's low to this candle's high right here on the 4H. Drop a 1 if you can see that. That happened on this impulse move down. So I did expect them to come up and fill that, or I did see that they did come up and fill that, and I've been waiting on this setup for quite some time. Price did come down, and then they fill that for value gap and have continuation. But what do you notice here, right? I have what's called a bearish breaker block marked up, and it did respect that perfectly, right? It respected the area that I marked up perfectly. So this is the idea behind bearish breaker blocks, and they go in perfect confluence with. And I did touch up on the regular education on breaker blocks a little bit, and what they are is when normally you'll have price. Let me find some white space, right? Normally you'll have price if you're in a bullish situation coming up, creating a high, creating a low, breaking structure, right? And then this would be your new trading range right here. Drop on the chat box if you get that. Once you have that structure break, this is your strong low down here, and then your new trading range is going to be right in that area. So you're not looking for this low to be broken, and the trend continues, right? The trend will continue as such. Breaks it up to the upside. New strong lows right here. This is your new trading ranges from this low to this high, and then just repeats itself over and over again. New strong lows, or you can count them as intermediate term lows, strong low, intermediate term low, and it just goes on forever, right? Normally you have that situation, right? But in a bearish situation, all of those lows are going to fail, right? Eventually, when you actually get into the area that you are going to be selling from, right? That's where you should displacement higher and lower from, right? So in retrospect, you can see that this is the last breaker structure right here, and we're in a bear situation now, and this is the last supposed to be strong low. Drop a one in the chat box if you can see that. I can zoom in just a bit more too. It's supposed to be a strong low right here, right? Perfect. So after price comes down and that strong low gets violated and fails, price is going to come back up into premium territory, right? So that's when you have your displacement higher up here. Let me see, displacement higher. And we'll look at this on the actual candlesticks too. And your displacement lower technically happened right here because it broke this low. Drop one in the chat box if you get that. Oh, I don't know why I left my white space. So that one, like I said, in the bull situation, that would have broke structure right here in this area. This would have been a strong low. It wouldn't have been violated. You would have had a continuation that would have reached for this high right here. But since this is a bear situation, that became a displacement higher, buy side liquidity take, and a displacement lower, sell side liquidity take. Or if you can do it like this. I think personally that this looks sloppy. Too much. It distracts you from the candles. I like to mark my displacement lower right here. And you can just mark this up as what it is, the sell side liquidity take and a buy side liquidity take. Normally, like I said, that would hold up, right? That same area that did not hold up is your new breaker block. What that means is that'd be a bearish breaker block, and I could do a better job of drawing this up because normally, I'm adjust some things. Normally, the low is also in premium territory. That's going to be your breaker block, right? And basically, that is a failed strong low and you're going to mark up the um, last bearish candle before the last liquidity take. So in this case, this would be the last bearish candle, and this would be your bearish breaker block, right? So when people are drawing in support and resistance, they are just kind of just drawing in areas that they see have been respected. And this is and goes directly in confluence. And I will do the trade breakdown in a second to show you with premium discount territory and the algorithm, right? That's a bearish breaker block, right? You're going to specifically focus on the area that failed. So basically on the displacement lower portion of this. So going back down to the example, right? Now that you see the bearish breaker block example, what happened here, right? The exact same thing. This is the exact same setup I drew out. We had a displacement higher, buy side liquidity take, displacement lower, sell side liquidity take. Change this template, displacement lower. For the sell side liquidity take, fair value gap created on the way down, price came back up, filled that fair value gap and started to continue down from that. And I noticed also a bearish order block close. And at the same time, in confluence with that, you had a bearish breaker block, which was this was the last down candle that caused the buy side liquidity to take over displacement higher. So I marked it up as a bearish breaker block, which is what it is, and look at how price respected that. Drop one in the chat box if you can see that, and that's in confluence with the other things that we have here as well. So this is the only true, and then I incorporate this into my trading now alongside everything else. I'll draw in my breaker blocks expecting them to be respected because they do. This is what the algorithm respects. So there's a 4H fair value gap right here as well that I'll mark in too inside of the breaker block. So if you need a second, I'm gonna give you just a second. You can see the result of the trade. This is just a simple market execution for the confirmations that I already had, plus the fair value gap, plus the breaker block combo. I knew they were gonna start from this area, and I did a market execution from 0.20% profit. Right. Another trade. Here it is. You're Australian down along. Same thing, right? So for a bullish breaker block, drop one in the chat box real quick if you get the bearish breaker block, right? The one that fails is going to be your bearish breaker block, right? This is respected every single time. And the breaker blocks continue to make themselves, and you can use this as true support and resistance, right? That's what true support and resistance is. None of this other crap that they're teaching you out there about support and resistance, but this is the institutional support and resistance that the algorithm actually respects. It's when you're drawing in those breaker blocks and you use that in context with the confirmations you already have, like displacement higher, displacement lower, you know, strong high being created, intermediate term high, fair value gap, all of that, right? So that was a bearish breaker. I would recommend using that if the simple science behind it, if you want to think of it as something a little bit more simple, is that if price break structures to the upside in a bullish situation, as you know, that low that was created is the new strong low, and your new range is going to be that trading range that impulse move started. The fact that failed after a buy side liquidity take and or break a structure to the upside is showing you that there is a bullish order block that should have been high probability or would have been in a bullish situation to buy from failed. So that same area, the algorithm comes back up and retests. So if you're in a bearish situation, what they're doing is they're coming in and tapping any more bullish orders that might have been left over on the table. And as you can see right here in the chart, on the CAD Swiss franc real quick, or Australian dollar Swiss franc, my bad. You can see right here on the chart on Australian dollar Swiss franc, anybody who was bullish right here in this area, their orders got triggered on these candles, but what did price do instead? They sold. So that's kind of the science behind it and how the algorithm operates. Anybody's order that did not get triggered on this push up, they come up and they trigger the buy stops in this area and then sell price down at the area where the last big pump of bullish orders were. Drop them in the chat box if you get that. They're activating those bullish orders and then pushing down to stop them out that are in this order block, right? So that's some simple science behind why this is happening and vice versa. So moving on to a bullish example. So I had to take a bullish and bearish example. in order to really show you guys, and we're gonna move this all the way up to some white space and explain a bullish breaker. So this is enough. If you were to take a challenge and use the same thing with everything else that I'm showing you here, you could do in about a week, be done with stage one. Most prop firms are 8 to 10%. This is 7% right here. It's from here to here, and you're only risking 1%. So between these two or three trades that were taken, let's just say I lose on one, that's still going to be stage one pass in just two trades, and you get to be patient, and that's it for that, right? So a bullish breaker situation is going to be the very opposite. How that looks, and I'll show you how it looks on the chart, is price will come down. Eventually, price ends up stalling out in the bullish situation, coming into some type of higher time frame footprint, usually a fair value gap, but sometimes an order block. Price comes up, creates a high, creates a low, takes out that high, right? Signaling, right? Same thing, signaling that they're going bullish, right? You had your displacement lower here, displacement higher here, right? That happened, and that's how that's going to look. So same thing. We've got some templates here, displacement higher, and then move this one over here, displacement lower. Once you know some shortcuts, TradingView, it gets really efficient and easy to use. Like holding control will duplicate things and then grab it and drag it. So you displacement lower, displacement higher right here. And then of course you have the buy side and sell side liquidity take. So I like to mark those up personally. Just keeps your brain sharp on what liquidity has already been taken so that you can always keep track of where price is going next. Recent major sell side was taken, and that's your key to potentially get in. I like to get another return on the fair value gap personally. It's a more safe entry. Sell side, wherever that is. Way sometimes I can't do it. So I say sometimes I can't find the things that I want. So yeah, buy side and sell side, they don't need to be that drawn out. Just show the area where price slash through the liquidity. And then what's going to be the breaker, right? Let's just pull this down just a hair. So the bullish breaker, right, in this case is going to be the high right here. And it'll be the last bearish candle, my bad, bullish candle, right, before the spike. The point is, once again, in a regular bearish situation, you would have price continuing to break structure to the downside, like so, right? Same thing, taking the sell side liquidity, right? Once it takes the sell side, this establishes a new high, strong high. This is a new trading range. Boom, price comes back up, takes the sell side again in this area, establishes a new strong high. This is a new trading range. Drop one in the chat box if you remember that. And price repeats itself right that. So normally in that situation, you would have a continued lower, right? And this would be the high probability bearish order block at the extreme high, right? Drop one in the chat box if you get that situation. In the high probability bearish situation, that is the case. Normally price will come back up and this would be a strong high and it wouldn't be violated. But instead what happened was it did get violated because you needed your displacement higher, and now you have a bullish breaker situation. That's juicy. Once again, the science behind that is that the bearish, high probability bearish order block failed, showing you that the algorithm is now pushing buy stops because you're looking for a buy. Let's just move this over a little bit. High probability bearish order block failed, showing that the buyers are in control, and that that goes in confluence with your displacement higher that you need anyways, right? That high right there is going to be your breaker block, and what you're expecting, right? Let's just say you have a fair value gap right here inside of the breaker block too. Normally, whatever footprint is going to be bought or sold off of is within the area of the breaker block. That's a hack. So you're going to know that price is going to come back down. Let's just say there's a fair value gap in here. Fill the fair value gap, also tap into that breaker block, and then have continuation to the upside. Drop one in the chat box if you get that. I encourage you to go back and back test this and look at moves that have happened, and look at this in confluence, right? So here's an actual trade that I took, right? 7% swing. Price, the same pattern right here. Price came down, was creating lower highs, lower lows. Overall, a bearish trend. Price came up. I'm gonna move this over real quick, just for example purposes. No, I do not want to modify that. Bro, you gotta let me move it over. That's what I'll do. That's what I do. Tricks sometimes in the front. Come on, bro. There you go. Perfect. All right. So price came down, created lower highs and lower lows. Obviously, a bearish trend. Price then traded above a lower high, which was this one. Drop one in the chat box if you see that, showing that they are going to be bullish. They're transferring to being bullish. So it's a complete liquidity shift. What happened, right? Price took buy side here. Price took sell side here. My bad. Price took sell side here first, and then took buy side, displacement higher or lower, displacement higher. So in that order, displacement lower, displacement higher, showing that they were going to be bullish. I marked up the bullish candle on the last lower high that they violated, showing that they were going bullish. That's my bullish breaker block. What's also coupled here that you see is a 4-hour fair value gap between this candle's high right here. And let's zoom in a little bit. Between this candle's high right here and this candle's low right here. Drop a one in the chat box if you see that. So now you have a bullish breaker in discount territory with a fair value gap that would be an ideal fair value gap deep in discount territory. What happened? Price came down. Price came down, and I'll show you why I have this sell side liquidity marked up in a second here. Price came down, dug into the fair value gap perfectly, and now we have continued bullish price action, and you got about a 0.5% running on a swing trade, and you just entered it in one day. So, let this progress overnight, or even into next week, you can have 3 to 5% running pretty easily, just on one single trade. So, why do I have the sell side liquidity here, but there's no low swept, right? Oftentimes when I'm entering on the 4-hour, before I move on, do you guys get bullish and bearish breaker blocks? It won't be this high. It'll be the first high that was violated on the way up for the displacement higher. And then it would be the higher probability low in a bullish situation that would be violated for your displacement lower. That would be your bearish breaker block for that, right? Perfect. So you can line that up. Okay, go ahead, bro, with the question. You can line that up with your already analysis, right? This algorithm respects this perfectly. Go ahead with your question whenever you're ready. Go down to the 15-minute real quick and look at the same area. So in this area right here, the reason why I have the sell side markup, you can drop your question in the chat whenever you have a chance. Yes, I would confidently choose the breaker block over the order block below, because the odds of price, that's a strong low, right? Real quick, that's a strong low right here, right? That have been established. This one right here, the one that where is it? I gotta go the 4-hour. Here it is. So the reason why I would pick the breaker block is because it's in confluence with the fair value gap, right? The last major sell side take was right here. So this is a strong low. It took a low here, so this was a strong low. Price came back up to here, and then this is how you kind of keep track of the lows. Came down here. This was the last strong low. Respected the strong low by mitigating this. Price came up, and now we're on our way up to take this high out and establish another strong low, which would be technically this one that mitigated this fair value gap. The reason why I would choose the fair value gap breaker block combo over the order block down here is because this is technically an established strong low, right? Getting ready to be established strong low once it's obvious, and you have your displacement higher or lower than higher. This is a new strong low, right? That's a bullish signal. And the reason why I would take this bullish breaker and the fair value gap combo is that the algorithm, they push order blocks and things like that, and they do hit off order blocks, but these order blocks have to be coupled with a fair value gap. That's the A grade order block. As you can see right here, this order block right here is coupled with a fair value gap. Oftentimes, when you have an order block fair value gap combo, 9 times out of 10, the fair value gap gets filled to about 50, maybe the high of the low, high of the candle of the low of the fair value gap, if that makes sense. So the higher of this candle would be the farthest that it would go, and sometimes it doesn't even come and tap that down candle, which would be the bullish of the block before the push up, and so that's why you have confluence here, right? You have the bullish breaker block and a fair value gap in discount territory. I'm going to bet on that and be 80 to maybe even 90% probable that this is going to at least see some bullish price action from here. If you're ever unsure, there's nothing wrong with a good old market execution. This big impulse, like if you drop down to the 15-minute time frame or something like that, it's likely going to have a fair value gap, and you can use that in order to enter on a 4 hour. So I would choose that over anything. Typically, if you're doing a breaker block kind of thing and a fair value gap, I'll look for it to at least make it to the 50% of the fair value gap, at least the 50%. In this case, it didn't, and I was able to gauge price action afterwards to see if it was going to actually get in. I did a market execution in this area, but normally I account for at least a 50% fill of the fair value gap. So I wait for some particular candle closes basically before I think about even getting in. So that's pretty much how I handle fair value gaps. I personally like to market execution from fair value gaps because they can be a bit tricky sometimes. I like to watch the fill and wait for some candles to close and then get a market execution because now you have a high probable low that won't be violated, and that's a good stop loss place. Perfect. I hope I answered your question, bro. If I didn't, let me know. So the reason why I have this sell side liquidity right here, and I don't know why I drew it out so far because I did put this on the 15-minute, is that at the time that I was looking, I dropped down to the 15-minute in order to see if there was any type of form of liquidity that got swept that where the candles were breaking down, right? Because I was in the 4 hour and I wouldn't be able to see this if I was on the in terms of the fair value gap fill. So I did see one moment. Perfect. All right, so I did see that it took out this low and also this low right here, and then filled the fair value gap and had a continuation. So I pretty much knew this was pretty bullish after that because this is how that 4 hour price action reflected on the 15-minute, and that's what led me to do the market execution where I did because I knew price was going to have a continuation from here, and this was a high probability low that I could use for a stop loss given the price action afterwards. Drop one in the chat box if you can get that. So when you're entering on the 4 hour and using breaker blocks, for value gap combos and things like that, go ahead and drop down to the 15-minute, or even if you're entering the 1 hour, drop down to the 15-minute or 5-minute and look for more exact and obvious liquidity takes happening into your higher time frame breaker block, or entry time frame breaker block. It doesn't matter. I like to do entry time frame breaker blocks. If I'm looking to enter on a 4 hour, I'll wait for the actual price action to play out. And then obviously the breaker block 9 times out of 10 gets respected. One more quick example. USD Swiss franc. This is a trade that might stop me out, but that's okay. It's still a good trade example. My trading plan was still followed, and that's really all that matters. We're about almost a 0.5% drawdown in this trade currently. It is a swing trade. I do allow a little bit more grace on my swing trades for them to fluctuate because there are times where you won't get a perfect entry and you might have a half or 0.6 or 0.7% drawdown, and then price will tank after that in your favor after like a day or two. Sometimes it does be like that, but like I said, you're only risking 1%, so you should be willing to weather anything between your entry and your actual stop loss is what you're saying that you're willing to weather in terms of risk. So there's no way you should be worried about anything because you literally signed an agreement with yourself by taking the trade and risking what you risk, saying that I'm mentally prepared to risk that much. So I'm worried about 0.41% drawdown, especially not after these rejections that happened on the breaker block fill and the other confirmations that I have. I do anticipate that the USD Swiss franc is going to continue to go down. And if not, I'll just get a re-entry. That's fine. But the idea behind this trade was same thing. If you look over here to the left, the last actual major buy side liquidity take was right here. Drop one in the chat box if you will see that. I came up and took this major swing high. Boom. So like I said, in a bullish situation, normally this would help somewhere in here, this fair value gap or something would hold up, and then this would be the next high that they would tackle. Instead, what happened was you had technically a displacement higher here on this big impulse move. You had a displacement higher here, displacement lower here. Bearish breaker block is going to be the last bearish candle, basically the bearish candle of the bullish order block that failed. Same situation. Drop one in the chat box if you're familiar with that in reference to what I showed you. I can zoom out a little bit too. Perfect. So that's going to be a bearish breaker block. We're also inside of a daily fair value gap, if I remember right. It's prompting me to get into this trade. That there was, if I remember right, it was a daily fair value gap. Give me one moment. Zoom out. But it wasn't a daily fair value gap. There was a daily order block, and I kept seeing multiple breaks of structure to the downside, and then coming back up. This is obviously in premium territory on the daily. So at most, this order block right here is going to be the one that's going to be respected, because this is the daily order block that once again had the displacement higher and the displacement lower. So that's a super strong high. This is a strong high coming down. This one took liquidity, so this would be a strong high. So that's why I anticipated it not violating this high, and that's the reason for the stop loss placement. Just for reference, I do use the daily time frame when I'm speaking trading for stop loss placement. And if I can't find a good stop loss placement on the daily, I'll look at my entry time frame and look at where liquidity has been taken already, and try to gauge my stop loss and entry behind the low. That's not likely to be taken, right? Obviously, if you want to sell, you want your stop losses to be as close to and behind strong highs, strong highs as possible. And if you want to buy, you want it to be behind strong lows and things like that. These strong lows that have been established, right? The high probability areas that won't get taken out, and if they do, guess what? You're likely just wrong on the trade in the first place. I recommend going in and reanalyzing and then seeing where you were wrong so that you can learn from your mistakes and not repeat them again, right? So another idea for this trade was that relative to on the USD Swiss franc. Yeah, I don't know if I saw those same equal highs. I'm gonna lie to you. I saw this one got taken out by these wicks, and that's what prompted me to kind of use this area to get in, because they had already been pushed up and mitigated and took out these highs as well. So I thought this was going to be the order block relative to the last structure break too. This is all in premium territory relative to that structure break. Even here, this big structure break too, all in premium territory area. So worst case scenario, I get stopped out. It's still a good trade example. I use a lot of structure and liquidity too. If they took major sell side and then took major buy side after that, it's not likely to. It barely broke past, but even the small liquidity takes do count. Sometimes they just take liquidity and they barely go above the high, and then they slide down from there. But we're about a 0.5% drawdown. Normally, if I get to 0.6, 0.7, and there's no signs of bearish price action in my favor, I'll cut the trade early to prevent risk, right? I'd rather get a re-entry and have an additional 0.5% risk than lose a whole percent. You know what I mean? It's just, you have to be a professional risk manager and learn about, instead of thinking about, I want to be a trader, learn about being a professional capital protector, right? So that was the kind of idea behind the trade. You did have a displacement higher and lower here as well. Big impulse move here as well. I was looking at, it was a big impulse move. Displacement higher happened earlier on my entry. When I sold, I noticed that, and I already noticed that the displacement lower already happened right here. So I didn't end up doing a market execution in this area. The idea was that there was also a breaker block. This is a bullish area, failed after the structure breaks to the upside. And this area had already been respected quite a bit and had already been impulse down, showing that this was a high probability area that institutions would sell from, right? So bearish breaker block right here, and I drew that in. So that's pretty much the idea behind the trade. Drop one in the chat box if you get that about bullish and bearish breaker blocks. So I'll train of thought for 1 second, right? So Once again, in trading, the point is not to be perfect. The point is to be efficient, right? And try to win as many trades as possible by following your trading plan. Exactly. Breaker block is also a bearish order block. A bearish breaker block is also a bearish order block. A bullish breaker block is also a bullish order block. And you have more confluence, especially if you have other bullish footprints like fair value gap and things like that, displacement. I mean, actually on the chart. Oh yeah, I see what you're talking about. Yep, you're absolutely right on that. That's a way of thinking. The point is to be efficient. Exactly, exactly. The point is to be efficient, right? So in that case, if I can be this trade may go into profit. Who knows? It's not a lot of drawdown. It's still floating under a 0.5%, and my other two are in profit. So even if I'm 2 out of 3, I can't remember how much I'm going for on these other 2 trades. Even if I'm 2 out of 3, thinking about a monthly goal, right? This is for 5% gain, and this is for 7% gain, if I remember right, right? Yeah, over 500 pips for, yeah, yeah. And I'm going for the daily highs, obviously, that to be taken out. Give me one moment, guys. I'm going for the daily highs to be taken out. 1 second. Close this door. So I'm looking for those daily highs to be taken out on the daily. That's kind of my objective. The euro's doing pretty good right now, in reference to recovering and things like that. I just, like I said, I had to take these on a demo to show you guys an example of trade examples using bullish and bearish breaker blocks. So if you see them being respected, yeah, man, if I do get stopped out of this one, I'm going to wait for demand more price action and get a re-entry, and then maybe scale it in for 2 entries to make up for the loss. That's usually what I end up doing. If I am correct on my second entry, I'll scale in from there and get 2 entries and call it a day. So does anyone have any? Yeah, man, same. I still today struggle with some patient aspects of patience, man. It does get hard sometimes when you just you're right on direction and you want the setup to just hurry up and set itself up. Does anyone have any questions on bullish and bearish breakout blocks? I encourage you to use bullish and bearish breakout blocks in your trading alongside everything else. This is a part of the strategy. You don't have to use it if you don't want to, but it is very, very optimal for getting nice entries and having a reference in terms of a zone, and you don't have to like write the text on it or anything. As long as having more confluence with your actual like fair value gap, order block, and things like that. You can have the breaker block and have an area that that price is going to respect and go from along with this. So just your homework is going to be to just draw in bullish and bearish breaker blocks on they specifically once again happen on displacement higher, displacement lower. Obviously, displacement higher is going to cause the bullish breaker, qualify that, and displacement lower portion of the sell confirmation is going to qualify the bearish quicker. And that's pretty much it. Like I said, I encourage you to use that. You can see that this was coupled with the fair value gap, so I have a lot of confluence along with some other confirmations as well. And right now, you can see profits still running up, now we're at 0.5% gain on this trade so far. I'm looking for a 1 to 7, and like I said, that would have been stage 1. And all you have to do is sit back and watch the trades run while you pass stage 1 of a prop firm challenge real quick. So maybe a week at the most. I plan on being in these trades depending on volatility. All right. So if you guys don't have any more questions, that was bullish and bearish breaker blocks. I will see you guys in the next live, which will be Friday tomorrow. No problem, guys. See you guys later. Make sure you back test this. Be sure to back test this and go back and look, because it's not going to do anything for you if you don't see it yourself and you haven't drawn it in physically yourself. Make sure you go back and look for this on the chart. That's actually a part of your homework. It's just drawing bullish and bearish breakers. I will see you guys later.